Tesla and Google earnings are crushing the market this morning. We need to talk about where we're at on the technicals. I am Dr. Stock, Doctor of Education, and if a ship wants to dress up, it should just wear a boat tie. I had a video out yesterday about my Tesla stock price prediction and earnings projection, and I had a bullish bias going into it, and I will give my reaction to that towards the end of this video. I do want to talk about the overall markets that we have with SPY, QQQ, because that could signal further pain that's out there because of the earnings reports that we got. So let me put this up here for you, and what we're looking at is SPY. So when we look at SPY, which tracks the S&P 500, the RSI is dropping. It should probably get close to 50-day if the pre-market is any indicator, and I think this is one of those times that we can count on the pre-market telling us a pretty accurate story. So watch and see. We are opening up near this trend line that we have across these bottoms that we've had going all the way back to April. And then we also, the critical line here is 542. We need to watch for a drop below that. If we come down and tag it and find support, fine, we can bounce back up. We can enjoy some upside to this. If we fall down below it, this light blue line that you see, let me get rid of these. This is the 50-day simple moving average. If we fall down below that, we can start falling down even further from there. We can start looking at the 530s, low 530s, following that price. So we need to see what's going to go on with the markets as a result of this. Getting pretty rattled in the pre-market hours. And so let me put the Bollinger Bands back up because they have the 20-period moving average on this, which has been support. We got back up above it, but with some uncertainty. If we open below it, that means that we've come up, retested, and actually failed that support. Having that broken again could signal a further sell as well. So I am pretty darn cautious right now with the market that we have. I have taken out a straddle position on QQQ using SQQQ yesterday. And that I think is going to actually be pretty good protection for me. I think it's really going to pay off to the downside in the near term. It is with the August 16th expirations, and the timing could be pretty right on that. With that said, over to QQQ. I talked about this head and shoulders being an eventuality, not knowing this is going to come up yet. I thought maybe we'd come up to this 487 line. We didn't so far. Now we're down here at this potential neckline of about 474. We need to watch for a break below that 50-day because not only is that a break below the moving average, but it is also a break below the neckline, which would confirm the head and shoulders pattern, which could mean a further sell for QQQ. So where could we drop to? Well, there's a little tiny gap that we could fill down to 468, and then down there we have historic support 464 and also at about 460. So we need to watch and see if we are going to continue in a downward direction, just how far we're going to go. The rest of big tech earning is going to be very telling about that. So we need to make sure that we're watchful for where that's going because this has been a very much Nasdaq 100 led market led by big tech. And so this, I believe, is going to be very influential for what we'll see for the S&P as well. And then if we move over to IWM just to see how the Russell 2000 stocks are doing, this ETF that tracks them is also down a little bit in the pre-market hours, though not suffering the same amount of pain that we saw with SPY and QQQ, but also does not have the same run-up, even though we have this recent run-up right now in IWM. If we go out to a weekly chart, for example, you can see that we didn't put in the same all-time highs that we did with SPY and QQQ. If I show the weekly charts for them, you'll see, let me reset the chart view. There we go. You can see that not only did we surpass the previous all-time high back here where the Russell 2000s also peaked out, but we very well exceeded that as well. So, and it's going to be a similar story when you look at the Qs, that we've just had a much higher of a rally for that. So small caps still sort of in an outperformance scenario, but enough selling for the overall indices for the S&P and the Nasdaq is also going to be a drag on the small caps. So we want to be watchful for that to see what we get from that. And it's going to be most likely Fed rate cuts further dropping and then dust settling. And then we really get a rampant time in a lower interest rate environment is what I'm guessing for the Russell 2000 stocks. Quick update on Bitcoin. Bitcoin's doing all right so far, still above the 50-day, and still above the 200, still in bullish territory. The RSI is still dropping on us in the near term. We need to watch for any sort of volume confirmation for direction. As of right now, we are flirting with that 5-day EMA, which is in green in here for you. And so if we continue to dangle off of that, then we got to watch the 13 that's just below it. And then just below that is the 50-day SMA and EMA coming together right now at about 63.5. So we want to be watchful for losing those 50 days because if we lose those, then we're likely going to take out the 200-day and the 60,000 line in the process. If we keep the 50 days and if we're able to break back with moving averages and this trend line resistance that we have right here, which should be fairly weak, then we can see further upside coming for us for Bitcoin. So I'm going to have to be watchful for that. So now about Tesla, what's Tesla going to do in the near term? So let me reset that view, and we're going to take down these so we can look at the candles and really see where Tesla's at right now. Tesla in the pre-market hours trading around 226, 225. And I said if we're not going to head up towards the 300 line off of positive earnings, we're probably going to head back down towards the 200 area off of the earnings instead. So I was wrong about the earnings, about the bullish bias, and I have some commentary on that. Like I said, I'll save it for the end of the video for people who really care about seeing that and seeing the adjustments that I could potentially make for the next time to get a more accurate projection on those. I will share that information with you here. So for this one, selling down as far as we are, the 200 day is all the way down here at about 205. So that's really what we want to watch. Not quite getting that golden cross moment yet. And we're going to have to watch the Tesla price action. But like I said, the essence of the earnings call, when I listened to the earnings call on Tesla, it just sounded like two words. It sounded like not yet. That's exactly what it sounded like. Hey, I thought that this could be that turnaround point, and there's a few things that kept us from that turnaround point. And I got to say, because of the way that there is still pricing pressure, and it's not only on the EVs themselves, there's actually also pricing pressure on energy generation and storage, which is something that I didn't account for such a huge drop there. But they, thankfully, luckily, they were able to also maintain the margins. Like I said, end of the video, I'll show you that, but I do think that not yet is the phrase that we want to think about for Tesla. And for those of you who are long-term investors like me, dollar cost averaging on the way down is what I'll be doing. And you guys are welcome to let me know what you're going to be doing down in the comments of this video. So NVDA in the pre-market trading at about 119. Watch the 50 days. If we break those 50 days, we are heading back down probably below 116, probably heading back down to this area and here, probably about 110. Down to 108. If we lose that, we have a gap to fill. I talked about this before. I'm going to keep putting it out there for you. 96 to 102. If we get down in the two digits, to me, that is a major load zone where we could actually see, or at least where we start loading up, I should say, because we need to see what the overall markets are going to do for this. But we could start to take some of that shine off of big tech and off of NVIDIA, at least as far as sentiment goes. And as that shine starts to come off, those valuations should come down, allowing us to de-risk any purchases that we make in the long direction for stocks. So that's what I have for you for those stocks. Like I said, I would show you, let me see where it is here, put that down, bring this up. So this is my spreadsheet with a few augmentations on here, and what you're looking at, if I can point this out for you, this column here, G, this is the estimates that I had going into earnings. Right next to it over here in column H, these are the actual values that came out, and I've adjusted the quarter over quarter and year over year numbers to reflect the actual values, and then I have the error and percent error at the end. So automotive with revenue came in pretty darn close. I was off on energy generation and storage. It was an overshot, and what we had was a revenue per gigawatt hour reduction. It was a pretty significant reduction, and I actually have a table on that over here that shows what it was like in 2021. So they were getting about $400 million per gigawatt hour in revenue at a cost of about $300 million to produce that, so leading to a margin of about 32.7%. And for this quarter, for 2024, I don't know if I said 2022 last time, but 2024, you'll notice the revenue per gigawatt hour has significantly reduced from what it was in Q1. So the cost of that revenue also significantly reduced. But when you look at the margin is essentially the same as what it was before. So I had an overshot when we look at the margins for this. Holy cow, what did I do? So coming back over to the data, you'll notice the disparity that you have between my value and their value, and that's that reduction that you see. And then you'll also notice the undershot in services. And what I have noted about there is that there's a further emerging trend for growth in the services and other category for Tesla. Now, the biggest difference between these two categories that you see, energy generation and services and other, is the margin that you receive from them. The lowest margin so far, and by far, is services and other revenue. If we actually look at the margins from this quarter, automotive was 22.7. When you take out regulatory credits, 17.2. Not bad. Energy generation and storage, 32.5. Services and others, 6.8%. So even though I was really close on the total revenue that you see, one major impact with this overshot on energy generation and storage being a high margin area, and the undershot on services and other being a low margin area, that certainly affects what you see in the earnings. Now for operating expenses, I was actually pretty darn close on this. What I was missing that would have taken the expenses up very much closer to this is the $622 million in restructuring fees. So if I include that in there, so put in a plus 622, what you'll notice is that that actually really brings us within 21 million between my projection and what they have. And so for me, how do I account for that in my next projection that I put out there? So I don't know that I can directly account for something like that, but I can go with a more conservative estimate that might account for oversights that I couldn't anticipate. And then if I still have a bullish bias given that undershot, then that would be something that would be very powerful. So I don't think I went conservative enough on this, and I think trying to be accurate was something that that came to kind of bite me. And you'll notice what you see then with the operating income that you see, that also brings it much closer in line. Also with the margins that you see, and the EBITDA values also come within line. And then why are we still missing then so much? We're missing, the error is still 25% on what we would have on for the net income attributable to shareholders on a GAAP and non-GAAP basis. Why is that such a big error? And well, what it was that I didn't use a high enough tax rate. And again, that goes to trying to be accurate versus trying to be conservative about the estimates that I put out here, especially when it's a bullish bias. So I should have run this as a worst case scenario to see what that would be. I used a 9% tax rate, and it was actually closer to a 21% tax rate. And when you switch that up to a 20% tax rate instead of what I was using, once we switch that to a 20% tax rate, you'll see it comes much closer in line with what we have here with the actual values of 59 cents per share on a non-GAAP basis to 52. And so you'll notice that actually explains a lot of the miss that you'd have, just those two big changes that you have. And then one other thing that it doesn't necessarily account for in total is what you see here. And the biggest thing that I could use in here that would change these numbers that you could see is that if I put in the $1.2 billion that can be accounted for through the fact that they delivered more vehicles than they produced. So as soon as I put that in, what you'll notice is that once again, that comes much closer in line to what we have, although you'll notice the cash equivalents and investments category still doesn't quite adjust. So there's a few things in terms of cash flow that I need to adjust for, but I gotta say overall I was pleased with how the projection turned out. However, the results that we got from Tesla, I would have liked to hear something a little bit more rosy. And like I said, the two words for Tesla I think are not yet. And I think this most likely sends us back down towards the $200 level more so than it sends us back up towards the $300 level in the near term. So that's something to be watchful for. We want to see if we stay above that 200. If we're able to stay above the 200 day and above $200, then I think we have a significant bounce coming our way. If we sell down below that value, then what we're doing is we're looking at values that are probably going to be in the high 100s. I'm going to say probably 180 to 200, I would say would be that low range that we would be looking for Tesla. It was actually a fairly good earnings, if you will. The CapEx spending, by the way, is expected to continue to be strong from what it's at now. They said in the first quarter that's going to be over $10 billion for the year. And when I look at the projections that I have out here and the actual values that we got, we are actually right at about the $5 billion mark. So about half of the low amount of what they would be spending in capital expenditures is already out there. So let me summarize this thing. The market's right now probably going to experience some softness. Watch the 50-day moving averages. Selling below that can lead to a much further sell for what we see. A lot of emphasis is now on other big tech that is out there yet to report their earnings. So we have from Microsoft, Amazon, Meta, Apple, NVDA. Those are all ones that we want to hear from. And what we're looking for all that big tech besides NVIDIA is demand for NVIDIA parts and services. And if we keep on hearing things about softness for demand, waiting on results, anything that causes any sort of sound of hesitation is probably going to really pull back pretty hard on NVIDIA's stock price. So that's what I have for you guys today. If you want to see my buys and sells, how I'm playing this market, you can check out the link down in the description for the Patreon. And if you also want to get access to a technical analysis trading course to learn to do technical analysis like I do, that link is also down in the description, guys. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.